If you buy 1,000 Tesla shares today, when the stock is trading at under $200 per share and Tesla reclaims its all-time high in the future, you will make a profit of $209,970. This is simple math that every serious investor understands, but let's see if the stock really offers such an opportunity or if it is just speculation. In this video, I will compare Tesla to 4 superstocks that have led the recent stock market rally. These stocks have been market leaders for over a decade now and have rewarded their shareholders massively. They are Amazon, Apple, Microsoft, and NVDA. I will examine their debt-to-equity value, share float, price-to-sales ratio, price-to-earnings ratio, and insider holdings. These are some of the indicators that institutional investors utilize when they want to understand the value of a stock. Chapter 1. Overview. Tesla is a highly popular company. Although it was nowhere near the top 5 companies that received the highest inflow of investment in 2020 and 2021, in 2022, it claimed the second position after receiving $16.8 billion from investors, thus overtaking QQQ, Apple, and AMD. In 2023, it pushed SPY aside to be the first ever company to receive over $45 billion of investors' money in a single year. Tesla CEO Elon Musk holds 12.93% of the company's shares, that is 411,682,162 shares worth $72 billion at Tesla's current trading price. Tesla's institutional investors include Vanguard, BlackRock, State Street, Morgan Stanley, and JP Morgan Chase. Approximately 43% of the company's stock is owned by institutional investors. The value of these holdings is about $245 billion. Only Vanguard and BlackRock hold over $73 billion worth of Tesla shares. Tesla's market cap increased from $28 billion in 2014 to $560 billion in 2024. That is a staggering 20x increase in Tesla's market cap and a 24x increase in its revenue. You may remember that in 2010, Tesla's revenue was only $100 million. Tesla's all-time high trading price was recorded on November 4, 2021. Today, Tesla is trading at $179 per share. Chapter 2. Debt-to-equity ratio. The debt-to-equity (DE) ratio is used to evaluate a company's financial leverage. It is calculated by dividing a company's total liabilities by its shareholder equity. The debt-to-equity ratio is an important metric in corporate finance. Generally, a lower ratio is better, as it implies that the company is in less debt and is less risky for lenders and investors. Currently, Tesla's debt-to-equity is 15%. It is the lowest compared to NVIDIA's 25%, Microsoft's 46%, Amazon's 80%, and Apple's 145%. That makes Tesla more investable today than Apple, Amazon, NVIDIA, or Microsoft. Chapter 3. Share float. Floating shares indicate the number of a company's shares available for trading. They do not include any shares held by company insiders, for example, Elon Musk. A lower float is better for investors because it helps a stock grow faster. MicroStrategy and supercomputers grew 500% within a few months because they had favorably low share floats. Compared to the 4 superstocks under discussion, Tesla's position is just above NVIDIA. NVIDIA's float is 2.4 billion shares, whereas Tesla has 2.77 billion shares. Microsoft has 7.42 billion shares on the market. In comparison, Amazon and Apple have a float of 9.22 billion shares and 15.41 billion shares, respectively. To put this in perspective, Apple needs over $15 billion of investors' money to push its shares up by only $1, whereas Tesla needs only $2.77 billion to do the same. Chapter 4. Price to sales. The price-to-sales ratio is calculated by dividing a company's market capitalization by its total sales or revenue over the past 12 months. The lower the price-to-sales ratio, the more attractive the investment. Tesla's current price-to-sales ratio is 6.3. It is the second lowest among these 5 companies. Only Amazon has a lower price-to-sales ratio, which is 3.3. That makes Tesla shares as inexpensive as Apple's and twice as inexpensive as Microsoft shares. What is noteworthy in this chart is that NVDA shares are 7 times more expensive than Tesla shares today. That is why many hedge funds, including ARK Invest, trimmed their NVIDIA holdings to buy Tesla shares. Chapter 5. Price-to-Earnings Ratio. The price-to-earnings ratio, or PE ratio, helps you compare the price of a company's stock to the earnings the company generates. A high PE ratio can mean a stock's price is high relative to earnings and possibly overvalued. A price-to-earnings relative value of less than 1 may indicate that the stock is cheap, representing a good time to buy. But that is highly unlikely the case for growth stocks or superstocks. Among these 5 companies, Tesla is in the middle considering its price-to-earnings ratio. It has a PE ratio of 40, compared to Apple's 26 and Microsoft's 38. However, it has a much lower PE ratio than Amazon's 62 and NVIDIA's 75. That means Tesla shares are more expensive than Apple shares and almost as expensive as Microsoft shares. But they are nowhere near Amazon or NVIDIA shares. NVIDIA shares are trading at a value 75 times higher than its earnings. In comparison, Tesla shares are trading at only 40 times the company's earnings. Chapter 6. Current Share Price. Of the 4 superstocks under discussion, Amazon, Microsoft, and NVIDIA are trading at their all-time high prices, while Apple is trading close to its all-time high. Compared to them, Tesla is trading at 57% lower than its all-time high of $409.97. If you're a trader who likes to buy high and sell higher, you may opt for Amazon, Microsoft, NVIDIA, and Apple based on where these stocks are traded today. But a patient investor like me will be more comfortable buying Tesla now at $179 per share, enjoying a 57% discount, and letting the stock grow and jump from peak to peak after that. Chapter 7. Insider Holdings. Insider holdings provides the investor with insight into whether company insiders are buyers or sellers of the company's stock. An increase in buying among insiders may be considered a sign of optimism about the company's prospects, while an increase in selling may be interpreted as a sign of pessimism. Multiple insiders making similar moves would seem to suggest that there is a consensus among those in the know that the company's stock price is headed in a particular direction for whatever reason. Currently, Tesla is the best company compared to the superstocks because Tesla insiders, including Elon Musk, hold 13% of the company's shares, whereas the percentage is 9.19 for Amazon, 5.94 for Apple, 4 for NVIDIA, and only 0.05 for Microsoft. Chapter 8. Conclusion. Tesla is the most investable stock among the 5 stocks we have discussed. It offers you the highest opportunity to be a profitable investor. Buying Tesla any time before $200 per share ensures a 50% discount on the stock from its all-time high. This is not financial advice, but if you invest in Tesla, you do not only invest in Tesla electric vehicles, but the AI software company it intends to be and has been collecting data for. You invest in Elon Musk, whose financial future is tied to Tesla's future. Most importantly, you invest in the enviable precision that works behind Tesla and SpaceX. Lifting a rocket off the ground requires stellar technological precision. It is a public matter, not a shady biotech glitch. A rocket either takes off safely or explodes. When you invest in Tesla, you invest in those human machines that refuse to give up until they win and win big. It is not for no reason that the Starship is the tallest, heaviest, and most powerful rocket ever launched by humankind into space. Buy Tesla shares, hold them forever, and create your portfolio around them. Just keep buying, irrespective of where the stock is trading, until you have taken a position you are satisfied with. Keep buying, defying all temporary news, earning setbacks, and technical delivery failures. Keep buying even if the EV sector declines and all other electric vehicle companies gradually disappear. One day, you will thank yourself for doing that. You will be rich and free. Give this video a thumbs up and subscribe to my channel for more videos on money, trading, and investing. That helps YouTube recommend the video to more viewers and let the channel grow. Thank you.